As of 2026, there are 34.4 million business owners in the United States, and many of them are set up as LLCs. In fact, one of every 7 taxpayers that come into my office own an LLC. LLC are the most popular business vehicles out there, and yet most owners aren't sure if an LLC is the right thing for them. I'm Indy, I'm an enrolled agent and a QuickBooks certified pro advisor, and today we're covering the mistakes that you need to watch out for before getting your LLC. Mistake number 1 is not knowing the type of income you're receiving prior to setting up your LLC. This is critical because your income type determines whether an LLC, an S-corp, or C-corp is the right move. You need to know the 3 types of income. So here are some of the type of income. You have ordinary income. It's pretty much your W-2 or 1099 compensation. And next you have passive income, which is money you don't actively work for. So it's pretty much investment property or interest payment. And then you have portfolio income, which is money from selling capital assets or capital gains. For example, if your income is passive, like from rental real estate, you're not subject to Social Security and Medicare taxes. That's why real estate investors love LLCs. If you're earning ordinary income, like from Amazon FBA or an online shop, you are subject to self-employment tax, federal tax, and state taxes. And knowing this distinction helps decide whether your LLC should remain an LLC or eventually ask the IRS for permission to transition over to S-corp. Mistake number 2 is not using your EIN for your income and expenses. If you set up an LLC but you're not using your EIN to open a dedicated business checking account, then you're not doing yourself justice. As a business owner, you need to separate your finances. Banks and lenders need to see income and history report for your business to approve you for loans or line of credits. During the pandemic, many business owners couldn't qualify for PPP loans or EIDL loans simply because they weren't running their income and expenses through their business EIN. Go to a bank and set up your account and start allocating your income and expenses correctly. Mistake number 3 is not understanding your tax form. Not knowing what forms you're supposed to use. Most CPAs just file returns. They don't provide the tax planning education you need. You need to know the forms yourself as well. So Schedule C is for sole proprietors or single member LLCs. It's a 1-page form inside your 1040 tax return. And now you have Form 1065. It's a U.S. partnership return. It's used for multi-member LLC partnership. This is a separate tax return from your personal one. And then you have a K1 form, which is filed by your 1065 partnership and is issued to the actual partners. And it shows their share of income to report to their individual tax return, which is called a 1040. And then you have a W-9 form. This one is used to document contractors you pay over $600 so you can issue them a 1099 at year end. Mistake number 4 is not knowing how to properly reimburse yourself as an LLC. Sometimes you pay for business expenses out of your personal bank account, and to fix this, you need an accountable plan. An accountable plan allows you to document and reimburse yourself for business expenses paid out of your personal account. There are specific rules for this documentation to ensure these expenses are correctly allocated to your business profit and loss statement so you can take the appropriate deductions. Once again, I'm Indy Please, and if you need help with bookkeeping or business tax preparation, click the link in bio for a free consultation, and don't forget to like and subscribe to the channel, and see you next time. Thank you.